What's up, YouTube? What's up? Back in the green. We're back in the green. You hear me? Back in the green. Oh, feeling like $1,000,000 right now. Oh, I love when I'm in green. Well, who doesn't, right? But what I'm trying to say is we're back in the saddle. Back in the saddle. So with that being said, it's another glorious day here. The stock market, feels great. You can tell the difference from my previous video. My demeanor was pretty bearish, right? And it's just like that, I mean, how the market treats me is exactly how I feel most of the day. Not that that matters to anybody, but it matters to me, I guess. It just kind of puts me in a better spirit if I make some money on the day. Most definitely. Especially, I mean, if you work hard, you get up in the morning and you're ready to grind and stuff, and then to get money back is it sucks, right? It sucks. But, back to business, right? As today, on AG, this stock is mostly for day traders because of the news. So, if you go here, I'm gonna explain to you guys how dangerous and how profitable these stocks can be. For example, you would have bought right around here at the BWAP, right? And let's say you would have sold somewhere around here. That's 82%. So let's say you have $100, right? $100. What's 82% of $100? $82, right? So that means with $100 you could have made 82 bucks. Obviously, this is in foresight, so in hindsight. So I mean, it's kind of easy to tell, right? But for example, I'm gonna give you a prime example. Imagine you have $10,000 and you put $10,000. 82% of that is $8,200. That's quite a bit, right? Okay. Well, now that you understand that, the profitability, now you need to understand the downside. Okay. Well, let's say we understand the upside. Well, let's say instead of going all the way up to 393, it would have came down to back to 114. That's a 44% loss, right? So that means if you would have had $100, you would have lost $44. So do you see the difference? I mean, you have to understand the risk. You can't just hold something forever and expect, oh yeah, it's gonna go up. No, that's not a strategy. That's a losing strategy in the market for sure. So what you have to do in order to be successful, you have to have you have to be able to manage risk, right? What does that mean? Okay, well look, I'm gonna break it down for you. If you would have just bought around here at this VWAP, the moving average price, and put your stop loss somewhere around here, right? You would have never, it would have never stopped you out because it just kept climbing after that, right? It started to break it down here. Even if it broke it over here, you would have been up, let's see, if you would have just kept moving it somewhere around here where it broke it, you would have been up around 43%. So that's a better strategy. Manage your risk of down here, your downsides. I mean, these are indicators right here. This is the moving average price, and a lot of people use this as a main indicator that for them to be successful. Now, if you follow this indicator and you know how to use it, right, you can definitely make some money. You can definitely make money with that. But with that being said, right, today on AGE we made about $243. That's not a whole lot, but I wasn't trading with a whole lot neither. I was using 1,000 shares. That's probably, let's see, $2,500. So, it's it is in a way a little bit, but compared to what I normally trade, no, it's not. So, okay, let's just say, and I think I took the first trade somewhere around here, and I collected somewhere around here because this candle was just not right, it's just not acting right. But I ended up taking it. I made like $100 and some. And I kept getting in and out here somewhere around here, and for the breakup back to the high, and it kept stopping me, and I was like pretty breaking even. I mean, I was still like at $100. This is where I made like about 200. That's what put me like at 2 something. I knew I was actually just waiting for this line. I mean, this line that I drew right here. I was waiting for it to just come down there, and then it did, and then I just like, all right, I jumped somewhere on here and I made some profit, and that's what put me at 243. For the day, I would think I was up to 280, but I took another trade somewhere around there and I got chopped out. So I was like, all right, I'm done. I made some money there, and then I made some more money on Apple. See, Apple was bearish all day. Right at the gate, right at the gate, it jumps all the way up to 116.40. I didn't jump. I jumped on the long side somewhere around here, and I sold somewhere around there. I made like $100. Then I waited for this to try to test the VWAP to go to the downside because I was gonna go short. Guess what? I go short. Bam. So I make about I think I was like 260 somewhere on there. And I wait for this consolidation here because I was just waiting to see the direction. And I waited. And today, the difference today, I was more patient. I was just waiting for my time. I was waiting for the timing because yesterday, my biggest problem was I kept breaking my rules. I didn't have a right setup. I was over trading. And that's the problem sometimes. When you overtrade, it can really be bad. So, taking dumb trades. And that's the thing. A lot of the times, you get caught up in your feelings, and then that's when things can go south. But we're back in the saddle. So okay, now right here, right here, if you look, this is where I knew that we were probably gonna break it, but it was struggling so bad. It was just struggling so bad to break this upside. If it would have broke somewhere around the 115 and 57 resistance, we could have moved up quite a bit, but it didn't happen until a little bit down the road. I took, let's see, this. Oh, I'm gonna show you guys something where it really pissed me off. See, I think I was up like $350 at that point, or no, $400 somewhere on there. But this is where it really pissed me off because it screwed me over. So, where is it at? Where is that trade that I took? Oh, right here. So, I'm thinking it's a fake out right here because it's struggling so bad. See how all those wicks, and I was like, the price action was super bearish. I was like, yeah, we're going to the ground, right? So, I jumped somewhere around here for the short because I was expecting it to go down. It goes all the way down here, right? And it was a red candle. I mean, I was like, yeah, it's definitely going down. Wrong. In the last 10 seconds or 15 seconds, this candle went from super red all the way to just a doji. Doji. And then it started going against me, and I was like, oh, I was so pissed off because I was like, wow. I mean, I understood it bounced off of it, but only one time. That was BS, man. Most of the time, this needs to test a few times if it's going to test it like that, but it don't have to. I'm just saying majority of the time. And it just, I lost about $100 there. So I was at 250 or something like that. And, whoa. We got some bearish momentum here. I'm going to probably take a trade to show you guys how it's done. See if I make money or lose money. Okay, look at the level 2. Look at the level 2. And we're going to jump in right now. Let's see what we got. Let's see if we get that slingshot back up. Yes, we're getting the slingshot a little bit. The reason why there's a slingshot effect is because you see that? Did you just see how that happened? That's called it's kind of like a rubber band effect, where after it sells off for so much, right, or goes up so far, it always comes because a lot of short sellers cover, and they get out of their position and they have to buy back in. So that's how you can take advantage of a move like that. I made about $60 right there while doing a video. So that's how you do it sometimes. Sometimes you get an opportunity present and you just gotta take it. If you don't take it, I mean, it could always keep going down, but the chances are, majority of the time, it always pulls back. You gotta look at the level 2. I mean, the times and sales level 2, and then you can predict kind of what's gonna do next. So now that we got that established, so yeah, that put me up at 567, and it was doing solid. I mean, for the day, it was actually pretty good, so I can't complain. Another thing is, today I want to break down a few stocks so that way you guys can get an understanding. Like for swing traders, I'm gonna give you guys an example. Like this is the leverage ETF. Leverage ETFs are pretty aggressive, that they have potential. So this is a bull, the bull, right? The bull ETF for biotech. So how do you trade these? Okay, I'm gonna give you an example. See, we have a resistance right there. Where is that right now, right? And it's kind of been stuck on this range, right? Where somewhere around there, right? It's hard to predict. Okay, well, but as of right now, we're still trending up, right? So the pattern is bullish. This is not a good deal for if you're going long. Okay, if you're going to expect the stock to rise, definitely not. Isn't an uptrend channel. Now, the funny thing about these stocks is that you can actually trade these pretty good because there's an inverse to it. It's called LabD. So if you look at the chart here, it's exactly the opposite of LabBoo. It's the opposite. It looks identical, just and the other way around. It's going to the ground, right? So how do you play these? This is actually a very good this is a good strategy because you can actually keep flip-flopping back to back from one to the other, and you constantly keep doing it. So right now, it's not a, I mean, it's almost there. It's almost there. Now, if I was going to take a trade on this, I will buy somewhere around 40-ish, somewhere on this line, right? And that reason for that is because, I mean, I wouldn't automatically just buy it, okay? That's never my intention. I'm never going to just buy something. First, it has to prove to you that it has potential for a reverse, right? So you have to be very careful with that. How do you know? Okay, well, now that you got to draw your lines like this, right? Like how I just drew mine. Then you have to come here and kind of look at this. This is a double bottom. Looks like a double bottom, right? This is what you call a double bottom, and the reason why it's a double bottom is because it taps the bottom twice. And when it does tap it twice, it's like a confirmation saying, "Oh yeah, this is the floor. Let's go up." So what happens after that? We start grinding all the way up here, and then bam, we touch that line that was up there, and then we get rejection. So how do you play these? Well, how you play these, like I said, if you have like the inverse, right? LabBoo. Right now, the trend is bullish. So I wouldn't be putting my money on LabD yet. Honestly, I would be putting my money rather on LabBoo because it's still uptrending. It's not giving you any signs of breaking the pattern. It's above the EMA, and this line right here is indicating that everything's pointing up. So until it proves to me that it's time to come down, test the bottom, it could happen. But you know, as of right now, I mean, there's another high up here, so it could keep grinding though. So don't think that it can't keep going up. It can keep going. It can break this one as well, and you're still thinking, oh, it's gonna reverse on the. No, sometimes it's just gotta wait. So what you got to do, how do you play this? At least how I would play it is I'm looking to see what happens here when it touches the EMA. When I start noticing there's another a trend going back up, I would jump on it again. But I got to see what it does here at the EMA first for me in order to take another trade. Because the last time it did it, look, it had a big red solid candle, boom, and then just gapped up. And we kept grinding, right? So this time it could do the same. It could come down here to that blue line and then just grind up again. And that's what you're looking for. So right now we have one pullback. Second pullback. The second pullback, I would say I would trade it, but be more cautious. The first one is like, I don't know. The first pullback is always easier for me to trade. It's not as complicated. Second one has to prove more. The third one, I never trade the third one. Third one is like, it's always breaking. So, okay, so now that we understand that one, let's see another stock. We got Facebook, right? Got Facebook here. Let's see. I'm going to break it down here. When is it a good deal? When is it a good deal? See it right there. We're looking at it pretty solid here. I'm going to draw one right there, and I'm going to draw one right here because there's one right there as well. There's one right there. Yep, exactly where we're at right now. See, yep. How is it validating or how is it true? See, it touched to here twice, and then it broke through it, and now it's trying to confirm this line. This line is trying to be confirmed as a support. So if it supports it and then it starts grinding up, right? That's how you would play this. But this could be also a fake out for the long side. Fake outs are pretty nasty because when they fake out, they go down really aggressive. So in order, what does this needs to do? What does Facebook need to do for me to, in order for me to believe that it's gonna keep grinding? I'll tell you what right now. Facebook needs to do a few things for me to start being bullish. I need to see the support here, right? And I'm not a favorite fan of trading triangles because I hate triangles. But in order for it to work, it needs to start. It needs to start making like this is support, or I need to start seeing support somewhere around here. Like it can't, not just one candle. I need to see a few. I'm very skeptical about triangles, so I'm always like, you gotta prove it to me more than one time, because I always get faked out on triangles. I hate triangles, so I'm more picky with triangles. So okay, so that's what and what is the target? Well, the target, if it breaks this 268, for me the target would be somewhere around, let's see, the first target would be at 278, and the next target obviously would be at 300. And why do I say the first target? Because I don't know what exactly will happen at 278. That brings a 5% gain. Your potential for loss is 6% right now. So I mean, it's not, I wouldn't put obviously 6% on the line. But anyways, all I'm saying is my first target would be 278, and then I would move it up to 305, depending on what it does on the pattern. If the pattern starts looking more bullish, then I'll keep it. It just depends. It just depends. Okay, now let's keep moving to Tesla. See, Tesla is doing this, still doing this triangle, but I see Tesla's actually doing something very interesting. It did a double bottom right there. See that? It did a double bottom on the triangle. 1, 2, grinding up. So now this I like this one. I really do. Because I mean, Tesla, to me, I mean, now we got to go test that high now. For me, in my mind, that's what we have to do. We have to test the 250 area. So honestly, this would not be a bad idea to buy in somewhere around here, because Tesla just did a double bottom and it's confirming it because it made another high. So hey, it's looking solid. Tesla's looking solid for the next move, and it's a triangle too as well, but this is what I really like. It make a double bottom, nice form double bottom. Yeah, it's obvious. It's an obvious pattern, and see, when it's an obvious pattern, it works better more because more people are seeing it. More people see like, oh look, I'm a genius, you know. That's why. All right, so now let's move on to the whole market. TQQQ, the Nasdaq ETF. So Nasdaq, that green line is the long-term support and resistance that I drew there. And why did I drew it like that is because, see, you can see when it breaks it, how hard is it to get back into it. It's a major support or resistance. If we ever break that, it's a definitely a confirmation to the downside or to the upside. See how it happened right here? A major support broke. We tested it to see if it was going to resist us, and then we just kept grinding down ever since. So those are the key things that you have to understand as a trader. When you have a super strong support, strong resistance, that usually indicates something is going to go for a long time, is going to go to that direction when it confirms the trend. So right now, we are in a head and shoulders pattern. Left shoulder, head, right shoulder. We have a huge resistance right here. Right here. At 139. 39, right? If we break 139, the next high, oh yeah. I mean, somewhere we got to test the resistance here, but I guarantee you, we will try to get to 176. By the time we reach to the, if we do break that, it will be somewhere around here. So it will be pretty close to the high, and this would be called like an apex point. Well, like I forgot what that word is. It's a certain word in the market where it's like two super resistance coming together, or 2 points, and they're like super strong. And subconsciously, people are like, man, there'd be so much resistance or so much support. It's impossible to break that, right? But if we do break that, to the upside, holy moly, is there a melt up? Talking about melt up, let me tell you why. Because you have so many people that are biased against one side, and when they're wrong, oh, that creates what you call a short squeeze, and that usually means a massive move to the upside. But we're not there yet. We're gonna play it as how we are. We're on the head and shoulders, inverted head and shoulders pattern, trying to move up to that resistance. If we break it, I think we could. I mean, who knows? But we're gonna play it day by day. As of right now, it's not a good deal to buy the TQQ. Now it may be a good time to buy the SQQ, the inverse of TQQ. See, we're on a major support, but I don't know. It's kind of like at a main support, but it's on a head and shoulders pattern. And head and shoulder patterns they break. That's about 15%. And no, sir, I will not take that. So with that being said, hey, that's just what you have. You have to just be more. If on swing trading, just have to be patient. That's all. On day trader, you don't have to be as patient. You do that most of the time. But with that being said, we're gonna keep it at that. Oh wait, before I go, let's break down SPY. See the SPY, SPY, S&P 500, baby. Still on this wedge right here. Wedges all usually break down depending on if it's going up, it'll break down. If it's going down. Now if it breaks through this resistance that I drew right here, that's when you call a melt up, a massive melt up. Because people are not expecting that. Most people expect it to go to the other way. And so again, we're making a wedge right here like I thought we were. Nice little wedge. And I haven't moved none of these things. So I wanted to see how it validated. And it's validating. We had a false breakout here. We gained it back up. And now we're grinding, baby. We're grinding. So, I mean, it's going to break eventually, the wedge. I mean, if it gets somewhere around here, I would start going short. Be careful with buying any position in the market because all the other ones, the stocks follow the S&P 500 or the Nasdaq. So be careful. So right now, that's pretty much it for today. I mean, if you guys have any questions, feel free to leave a comment below. Don't forget to subscribe, like, and I mean, we're gonna grow this channel, guys, and we're gonna make a lot of money. And try to have some risk management so we don't lose a whole lot of money like yesterday. With that being said, you guys have a good one.